Hey everyone, and welcome back to the channel. If you've been watching the crypto market lately, you've probably noticed something pretty puzzling about Ethereum. On one hand, we're seeing absolutely massive capital pouring into Ethereum exchange-traded funds, yet the price of ETH itself seems to be stuck in a perplexing sideways movement. What is truly going on here, and why isn't the price skyrocketing as many would expect? Let's unravel this fascinating mystery together right now. First, let's talk about the undeniable influx of capital. U.S. spot Ethereum ETFs have been attracting significant investment, with net inflows recently topping 19.1 million on June 18th and 21.4 million on June 16th alone, reflecting robust demand. These are not isolated incidents. We've seen a consistent stream of capital, marking the third straight day of inflows around mid-June and continuing for 6 consecutive weeks, which is the longest streak since their launch. BlackRock's ETHA ETF is leading this charge, having seen inflows of 15.1 million on June 18th and even larger acquisitions of 101.5 million on June 13th, including a staggering $160 million purchase that marked the highest daily ETF inflow in 4 months. The cumulative net inflows for Ethereum ETFs reached about $1.25 billion over just 19 days in early June, and historical cumulative inflows are now well over $3.9 billion. Total assets under management for U.S. spot Ethereum ETFs have now reached a record $10.56 billion. Overall, Ethereum investment products are rapidly approaching a monumental $1 billion in monthly inflows for June, having already attracted $879 million. Year to date, these products have seen $2 billion in inflows, solidifying Ethereum's growing role in institutional portfolios, especially for American investors. When you see a financial giant like BlackRock managing trillions in assets, making purchases of this magnitude, and aiming to become the world's largest crypto asset manager by 2030 with a strategic focus on Ethereum, it signals a profound and growing belief in Ethereum's long-term value. This surge in institutional adoption is often seen as a critical milestone, effectively reducing the perceived entry barrier for more traditional, risk-averse American investors looking to enter the digital asset space. So, with all this money supposedly flooding in, why isn't the price of Ethereum soaring? This is where things get interesting, and some market experts point to what they call accounting magic, or strategic maneuvers by large players. It's not simply a matter of new money hitting the market and immediately buying up available supply. For example, a significant portion of BlackRock's reported Ethereum holdings, which have reached 1.4 million ETH valued at $3.7 billion, might have been acquired at much lower prices long ago. These assets could then be concentrated into the ETF custody addresses after approval, creating the appearance of explosive buying on public data, when in reality, it's frequently more of a left hand transferring to right hand situation. Furthermore, true institutions often prefer to build their positions quietly through over-the-counter or OTC trading, avoiding the price ripples that large exchange orders would create. There's also the subtle tactic of short hedging, buying spot Ethereum on one hand, while simultaneously opening larger short positions in the futures market. This can create a false buying signal before ultimately leading to a price suppression. Even some retail investors attempting to hedge risks on their altcoin holdings by shorting Ethereum have found themselves in a double kill scenario where altcoins plummet, but Ethereum's price remains relatively flat, leading to losses on both fronts. This complex interplay of strategies means that the direct impact of ETF inflows on immediate price action isn't always as straightforward as it seems for the everyday investor. The market can be incredibly deceptive, constantly testing investor conviction with these subtle fake moves intended to mislead. However, looking beyond the immediate price stagnation, there are undeniable bullish signals emerging from Ethereum's underlying metrics. The Ethereum taker buy-sell ratio, which measures the balance between buying and selling pressure, has consistently shown buyers dominating the market, with recent data indicating a ratio above 1, signaling aggressive buy orders and strong demand. Historically, such sustained buy-side dominance has often been a reliable precursor to significant price increases. The OI-weighted funding rate for Ethereum futures has also reflected bullish spikes, indicating strong buying pressure as more traders take long positions, driving increased liquidity. Whale activity, a truly key indicator of market sentiment, has been robust. Wallets holding between 1,000 and 10,000 ETH have added over 14.3 million ETH to their holdings in June alone. alone, marking the highest figure for this cohort this year. This includes massive single-day gains, such as over 871,000 ETH accumulated on June 12th. Such aggressive accumulation by these large players has not been seen at this scale since 2017, strongly reinforcing high investor confidence. Adding to this, the total supply of Ether on centralized exchanges has fallen to an all-time low of 18.57 million ETH and has been steadily declining over the past couple of months to about 14.77 million coins. This significant reduction in liquid supply, coupled with a new all-time high of over 35 million ETH locked in staking, which now represents over 28.3% of the total supply, creates a powerful supply-demand dynamic that strongly favors higher prices. Ethereum is also increasingly cementing its role as a financial hub, now holding over $4 billion in tokenized real-world assets. From a technical standpoint, Ethereum's price has been consolidating within a defined range, oscillating between support around $2,408 and resistance near $2,695. Analysts are keenly eyeing a potential breakout if the price can decisively breach the $2,695 level, with optimistic targets extending as high as $4,000 or even beyond. Many technical indicators are pointing to a potential bullish shift. A golden cross pattern is forming on the daily chart, where the 50-day exponential moving average is poised to cross above the 200-day exponential moving average. Historically, this crossover has been a strong bullish reversal signal, very often preceding significant rallies. Some analysts also observe a morning star pattern mirroring Ethereum's 2017 setup, which preceded a rapid price surge back then. If this pattern holds and price action confirms continuation, Ethereum could confidently move into a phase of relative strength against other digital assets. Predictions from experts suggest ETH could reach between $2,800 and $3,600 by the end of the year, with potential for even higher gains if developments like ETF staking and broader network enhancements accelerate. Looking ahead, the long-term outlook for Ethereum remains incredibly constructive. The consistent inflows into ETFs, even if their immediate price impact is diluted by trading strategies, represent a continuous buildup of institutional support. These ETFs are often described as long-acting medicine. Their full effects may not be visible in a week or a month, but over 2, 3, or more months, the cumulative demand will undeniably influence the market. The highly anticipated regulatory approval for staking within Ethereum ETFs, particularly for a powerhouse like BlackRock, is widely seen as a transformative game changer. This feature would unlock a dual engine of yield and deflation, further bolstering Ethereum's value proposition. Ethereum is actively solidifying its position as a foundational settlement layer for on-chain financial infrastructure, a crucial trend accelerated by positive regulatory developments surrounding stablecoins and the success of major crypto-related IPOs. So, while the market might be playing some tricks in the short term to shake out less confident investors, the underlying fundamentals and institutional conviction suggests that a major trend is indeed brewing beneath the surface. It will certainly require patience, but the stage appears to be meticulously set for Ethereum to continue its remarkable evolution as an increasingly indispensable piece of global digital infrastructure. Thank you for tuning in today and staying informed about these critical developments in the crypto space, especially regarding Ethereum. Remember, staying educated and understanding the nuances of the market is your best defense against volatility and misinformation. Until next time, stay smart, stay informed, and keep building that financial future. See you soon.